Hey guys, hope you are all having an amazing weekend. Before we begin with today's content, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. We are finally in 2022 and already are looking extremely good. The new Spider-Man movie has soared past $600 million domestically, bringing its total worldwide box office performance to $1.37 billion, ranking as the 12th highest grossing movie of all time after passing up Black Panther unadjusted to inflation. I literally cannot wait to hear what AMC's new earning report numbers are going to be, but I can assure you with utmost confidence that it will absolutely wreck all the FUD, and most likely show itself to be the best performing quarter since the pandemic began, and maybe even more than that. GameStop's recent NFT venture and open invitation to bring creators over to its platform has been met with total disregard by the media. As if blockchain technologies weren't the next big thing, as if every video game company wasn't looking to adapt NFTs into their games, the media completely ignores one of the hottest companies in the market introducing their NFT platform. In fact, CBS News is actually releasing petty articles mocking retail investors, poking fun and laughing as we apparently got our first taste of reality heading into 2022. I told you that beginning in 2022, the media was going to get more bold than ever and really hammer down on FUD-ridden articles to convey the message that the meme stock movement is dead and done. Their publication apparently argues that the shorters got decimated by retail already, and so that there is not a large crowd of people big enough shorting meme stocks. This belief, which is unsupported, drives the narrative that the meme stock movement will simply move on to better alternatives like the hottest cryptocurrency plays or something else. Literally, a small 5-minute look into social media will dispel this weird narrative. The AMC and GameStop subreddits keep on growing. On social media, more and more people continue to jump in. To make things even better for us, institutional investment of meme stocks has and continues to grow as well. Everyone is buying and holding, and the bot media keeps on telling us that the party is over, that it ended back in January. I cannot wait to hear what they have to say when we start jumping back up again. I just wanted to show you guys that the media will indeed ramp up efforts this year. Some of you asked me to simplify inflation concerns for you in really smooth words without big explanations of the mechanisms that surround it. Expect inflation to continue moving upwards this year, and there are several factors for this. Number 1 is that supply chains are still bottlenecked, and many of the issues are not fully resolved yet. So long as the time to move goods, and the price of these goods is elevated due to increased demand, you can expect the higher transportation costs and everything else to continue to be passed on to you. Another issue with inflation is high costs for commodity prices, which are leading the hike in prices for energy and food. With food, already we have empirical evidence that consumers are either buying less or switching stores. To make this worse, rising rent prices continue to be a main concern. A lot of people underestimate the impact of housing, not taking into consideration that this is one of the biggest things people spend the most money on. Because of rising rents, people have less in their pockets to spend, which means less cute dates, less going to bars, less traveling and leisure activities. And now, there is Omicron. Unless you have been living under a rock for the past 2 weeks, you will know that the amount of infected cases has blown up, hitting record numbers. All in all, the Fed has no control over anything, and it shows every day. Lastly, it appears everyone has been noticing glitches happening all around brokers as of late. High short interests, different prices at certain times. Over the past couple of weeks, a high number of problems surrounding GameStop and AMC fundamental data has been reoccurring, and even though institutions tell us to not mind these small technical problems, we know better than that. Why is it always that GameStop and AMC data seems to have issues? How ironic and predictable it is that the two most popular stocks continue to have these issues over and over, usually arising in between certain periods. Well, it appears that the New York Stock Exchange has been removing some data. In a post made on Superstonk by a user named DJK934, on the last available retail liquidity program report, GameStop data is no longer showing up in the tape data at all. This program marks orders as originating from retail, which, as the Superstonk user points out, is just a way to tag retail orders as prey for high-frequency traders. Though not fully confirmed yet, we can highly speculate with a degree of certainty that Citadel operates the main retail liquidity provider for GameStop, since they are the designated market maker for the stock as well. The SuperStonk poster typically collects data on GameStop, but oddly enough, between the dates of December 20th through December 23rd, GameStop data was not included. You are telling me that data for one of the most highly traded stocks in the world just happened to randomly disappear? This is highly improbable, so here are some of the theories that explain what could be happening. The first one, which comes from the very same SuperStonk poster, is that no shares of GameStop were processed through the retail liquidity program in the week before Christmas. The other theory is that the data was simply removed and erased. This could provide the New York Stock Exchange some leverage. You see, using the RLP program data, you can make a reasonably good estimate of how many shares retail is purchasing each week, and then make a good portion estimate of how much of these shares get DRS. The New York Stock Exchange simply wants to remove transparency from this program because of what it could mean for them. I agree with many things in this theory. This is because I know brokers have had nightmares with the crazy high amount of requests by retail traders transferring shares out. We know that many brokers have been caught not having enough shares to transfer because their supply has been running short. A user that goes by Brook C83 thinks that retail trades on a single broker are internalized from their own supply until more shares are bought in surplus. Due to many transfers being draining the broker supplies, they can't be marked retail now since they have gone DRS. Any additional shares purchased by the broker to cover the request of transferred shares would be bought by the broker and immediately transferred as DRS. This entire stock market system is not broken, it is a full-on scam. The good thing to take away from all this mess is that the New York Stock Exchange is hiding data, because they know of the ramifications of displaying it. It is now more evident than ever that retails own more than 100% of float, and the New York Stock Exchange is scared because they know their scheme is slowly coming to a halt, so they are making important data disappear. Let's quickly talk about where we could be headed this week in terms of price movements. AMC will find support at 27, 25 and 23. Resistance will be found at 28 and 30 for the most part. Friday's performance was pretty bad, as we were unable to climb above 30 like we did on Thursday. We tested support at 27. We are going to need bullish volume to retest 30 again, and we need to consolidate above and stay above 27 if we are keen on bouncing up again. If not, AMC will fall back down to 24 at the worst scenario. If we rise above 29 and break past 30 by Wednesday, I will be very bullish about testing 35 by Friday. AMC has been dragged down a bit by all these poor market conditions along every other stock out there, so this fall has nothing to do with it. These are just shorters taking good advantage of market weakness, so keep that in mind as we go forward. This past week, AMC traded horizontal for the most part, which makes it hard to estimate where we could go. I think we have a fair chance at retesting 30, but we already tested support at 27. And if the bounce from this is not big enough, we are likely to retest it and possible break below it. AMC has been killing it with performance, so any dip in this stock is an amazing opportunity to buy in cheap. GameStop should find support at 142, 139 and 127. Resistance will be met at 151, 156 and 160. This past week, GameStop had really good performance, climbing up from 139 to 160 at one point. The dip we experienced on Friday sucked, but I think of it as a retracement. I think GameStop has a really good chance to retest 160 again this week. I would personally love to see it breaking above 150 and consolidating above this price. Every time we break underneath it, it just weakens the momentum, so I really want GME to consolidate strong above it and build the biggest support wall on it. I think a run to 180 is possible if we break out of 160. We have been trading below this price for 2 weeks in a row now, and I think it's obvious that GameStop is heavily oversold on a technical chart. A bounce above 200 would be amazing, as there is no reason this stock should be underneath it. The biggest catalyst for GameStop in the short term would be to announce their NFT platform in partnership with Loopring. I think this announcement will have a resound effect on its performance, but a very short-lived one. I think once they officially open their NFT platform and start collecting revenue from it, that is when the entire negative attitude the media has had on this amazing stock will come to an abrupt end. You can say all you want, but if the quarterly reports start showing great revenue and higher profits, even the most skeptical will want to take a position on this. I don't know how shorters are going to handle the influx of institutional investors wanting to jump on board. Keep in mind that OpenSea, the current biggest NFT platform, has a valuation of around $10 billion. When GameStop launches their very own NFT marketplace, it will be much bigger and better than OpenSea. I can see the valuation of GameStop rapidly growing by more than 10 billion, which would be a terror brought to life for shorters. Do not underestimate this company, because it is literally going to the moon. That is not even accounting for their growth in e-commerce traffic, which seems to be growing more and more each quarter. I cannot wait to see what happens with GameStop, and couldn't be any more excited. That is all I have for you guys today. Thank you all so much for watching this video to its end. Thank you to all who wished me a happy new year. I wish you all the best as well. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Until then, enjoy the rest of your weekend and to the moon.